If you're wondering where Bitcoin's headed next, Fundstrat's Tom Lee has one key chart he says can answer that age-old question for you. Tom's over at the Plasma to break it all down. Tom, what are you looking at?
Well, in general, we think mining and fundamental factors like network effect really drive Bitcoin's value, but macro factors have an effect on network value. So the chart we have here shows you two lines. The orange line is the MSCI Emerging Markets Index relative to the S&P. And the other one is Bitcoin's price. As you can see, as EM actually rallied into the end of the year, we had a huge Bitcoin rally. And as EM has since fallen, we've seen Bitcoin fall sharply. And you might wonder, well, what's the linkage? Why do we think they're connected? Well, there's two factors. The first is hedge funds. See, hedge funds typically rent emerging market stocks. So they do risk on, risk off. So when they're risk off, Bitcoin also suffers because they're risk off. The second reason has to do with wealth effect. Wealth effect means if you're living in an emerging market and you see your stock market fall hugely, well, that means you have a lot less money to buy Bitcoin, so that affects the network effect because you can't buy Bitcoin. So I think there's two reasons why emerging markets indexes actually influence Bitcoin.
All right, I think Tom's going to come over, right?
Yeah,
we got it.
I've got some
Come on over,
interesting
Tom.
stuff.
Michelle will bring the chair in. Come on over, Tom. Walk on over. We can't wheel you over.
I thought there was a string attached to like a puppet string. I was waiting.
Take a seat. Make yourself comfortable.
Yeah, come on in.
This implies that the greatest percentage of Bitcoin trading and Bitcoin buying or crypto buying, crypto trading comes from hedge funds as institutions and then also emerging markets. Do the numbers bear that out? Well,
and you're right. There's an implication. I do think in 2018, trading has shifted. I think there's actually a lot more trading in the U.S. now, and I think on the margin, exchanges like BitMEX have attracted macro hedge funds. So I do think hedge funds are playing a role right now. Until we get other on-ramps, they're really incremental demand for crypto.
So, Tom, speaking of the incremental demand, a lot of the macro funds are in the futures market, CME, SIBO futures. From your clients you're talking to, are you seeing global macro managers adding this on as kind of a part of their process? Because I still struggle trying to find a lot of those people.
Yeah, I mean, they're really interested because it has to do with all their new analyst hires. You know, they're hiring all these guys out of college, and all of a sudden these guys are very into cryptocurrencies, but hedge funds aren't plumb to be adding Bitcoin into their portfolio mix. I think it's double complicated because there's still this complication of like how you store the Bitcoins. Because today they don't really want to take custody. I don't think their investors want them to take custody. And the second is understanding valuation models because there isn't a lot of research out there except for a few people who do research on it. So I think there's a lot of education taking place. I think backed is, as you mentioned many times, is a huge deal because it really simplifies the process. It's one day settled. And then I think it pretty soon we'll see, the potential for custody products around that to develop. So, matter of time.
We had BK speak at our conference up in Boston, our crypto conference, Tom. He did a great job. But so we've done some of that research on it. We do kind of the same thing outside of the crypto world. When you get feedback from clients, it's a very sentiment-based trading vehicle right now. What kind of feedback are you getting on it? Are people negative because it's down, or are they thinking about it as an opportunity?
Reflexivity is much bigger in crypto. So like in traditional markets, you want to be contrarian like 80% of the time, or 60%. I think in crypto, when people are bearish, it's tough to actually be contrarian, And so I think what we're seeing though is we are seeing a crescendo of negativity.
So it's inflecting.
Let's look at the misery index, by the way, just so we can illustrate.
That's right. So the Bitcoin misery index, for instance, is actually at 36. So it's actually
pretty miserable.
It's very miserable.
Has it inflected?
Very sad. Like it has, because it bottomed at around 21, so it hasn't gone back. And we've had some bad news this week, two big setbacks, right? The SEC almost, universally canceled 9 applications, and then China did essentially a reban because it sounded like they had to clamp down again on crypto, and Bitcoin's actually rallied.
Last, quickly, 20,000 by the end of the year? More than that? Where are you on?
Running out of time.
Yes, I think we're running out of time. I'm actually applying to try to change the calendar year. But Bitcoin, it only takes 10 days for 10 days are all the return of Bitcoin.
So you're sticking to that bullish forecast.
So I still believe it's possible.
All right,
yes.
Tom, thanks. Tom Lee of Fundstrat.
It wouldn't be that hard to get there. I mean, remember, in the middle of November, Bitcoin was at 6,000. and it went to 20,000 or 19,000 or so by the end of the year. So it is extremely volatile instrument. It wouldn't be hard for it to get there.